Welcome to the Build Your Own Business podcast. My name is Lauren Lomsdale, and I am a serial entrepreneur who has started, scaled, and grown several businesses over the past 12 years. And together with my husband, we have helped hundreds of clients do the same. This podcast is for those small business dreamers who are wanting to take the leap into starting their very own business, as well as those business owners who have big dreams of scaling their business. We provide step-by-step how-to guidance, discuss growing pains in your business, and give real-life business lessons and advice that you can apply to your own business. So BYOB and pull up a seat because we are going to build your business. Hey everyone, welcome to another episode of the Build Your Own Business podcast. My name is Lauren Lomsdale, and I'm here to talk to you guys today about something that I find to be one of the most complicated topics for small business dreamers, something that really stalls them out, which is their business formation and business taxes. And it's a lot scarier than it is. Lots of businesses do it. Lots of people do it every single year. And we are right now in the throes of tax season. So I thought this would be a good time to kind of talk about it and give you guys some layman terms of what it all means in case this is something that is completely stalling you in starting your very own business. So as a very large, very loud, please pay attention to this disclaimer. I am not a tax professional. I am not a business formation lawyer. This is simply an explanation in layman terms about what these different things are and what you might be thinking about for your, I've got sticky notes on me, what you might be thinking about for your very own business. And this is something that can feel really complicated. So I'm just trying to explain it kind of in layman terms. But of course, do your own research, consult a tax professional, consult a business formation lawyer for what might be best for your own business. This is completely just informational, just sharing experience, sharing some clear explanation of what these different types of things are. So we're going to be talking about a couple different things. One is an EIN, your employee identification number. One is self-proprietary versus LLC, what the two differences are and what that means, and if you should establish an LLC and how to establish your LLC. And then we're going to dive just a little bit into what an S-Corp is and what you might be looking at in the future for yourself as a growing business owner. Okay, let's dive in. Okay, so the first thing we're going to talk about is what's called an EIN or a TIN. This is the employee identification number or your taxpayer identification number. If you are just starting a business, whether you are going to establish an LLC or you're just going to be self-proprietary, it is 100% recommended to get an EIN or a TIN. They're basically the same thing. They're just called two different things on different forms. Your EIN is something that you will establish, and you can establish even if you're a W-2, but you can establish when you are a contractor and you're self-proprietary. Your TIN typically is something that is established when you establish an LLC. So it's just your tax identification number. The reason you may want to do this is because protects your personal identity. When you fill out any sort of tax forms as a self-proprietor or an LLC, you will be asked for your EIN or your social security number. This EIN takes place of your social security number. So this helps you to have a little bit more personal protection on some of your official documents and official information when doing contract work or having your business do certain types of work. So always recommend to do it. It is free. Through the IRS, it is free. There are businesses that will pop up when you Google it that will say they will do it for you for whatever amount of money. You do not have to pay for this. This is free. So you just fill out a form on the IRS website. Oddly enough, you have to do it during like regular IRS hours. So you can't just do it in the middle of the night. But you fill out a form and they will send you information on what your EIN is. They will let you know based on how you filled out that form if you need to send in any additional forms or paperwork. And there you go. You have your EIN. So really simple to do. So the biggest question people often ask is, do I need an LLC and how do I register it? An LLC is basically a protection on your personal assets for your business. So if you are doing business with somebody, whether it's contract work, virtual, selling products, whatever it is, you have an LLC so that if somebody were to come and sue you for something, your personal assets, your home, your mortgage, your cars, whatever, could not be rescinded during that lawsuit. They can only rescind anything that is a business asset. So it protects your personal assets for you. So an LLC is often recommended to have from the very beginning, no matter what type of business you have, so that you can protect your personal assets. Some people choose not to do an LLC and they just are self-proprietary, which you can do. It just means that your business doesn't have those protections as it does with an LLC. And there's different personal reasons why people do this. It is easier to do it this way as self-proprietary if you're not making a whole lot of money. It tax wise, you're still taxing under your personal income for LLC and self-proprietary. If you're a single member LLC, your taxes kind of show up the same way. You're still filling out self-employment forms. You're still filling out certain schedules and certain forms when you do the taxes, but it feels a little bit easier to do it as self-proprietary versus an LLC. And it may not be necessary. Your state may not require it. Your business may not require it. And you just generate your income, especially if you're not making a whole lot of money. You may not feel like it's necessary for you to set up the LLC because you're either losing money the first couple of years or you're just not generating a whole lot of income. Self-proprietary just it's okay for a low profit and low risk business. So for someone like myself, I was self-proprietary for years because I was a virtual assistant or a freelance writer. I was just doing occasional contract work. There was no real reason for me to set up an official business. And it was very low income. I was just making, a couple $100, maybe $1,000, $1,500 a month. There was no real personal investment into my business. I wasn't taking on my own clients or doing anything like that. So it really didn't make sense for me to pay to register, in a state for an LLC or register my business, anything like that. It really just, it was low risk, low income. But many people will say from the get-go, you should have an LLC. It really just depends on what your business is, what you're doing, and if you need to register an LLC based on what your business actually is. So really the self-proprietary and single member or multi-member LLC, self-proprietary, and they're all taxed in the same way. They all fall under your personal income taxes. They all are, you fill out certain forms for self-proprietary versus LLC, but they're in general, the taxing of it is very similar. Again, self-proprietary just means that you yourself are doing the work. You are the person doing the work. You might have a business, let's say, in terms of having a business name and whatever it might be. So when I first got it started, I was just a virtual assistant and freelance writer, but I wanted people to have a website to go to and to find more information about me. So I was doing business as LML Creative Studios. This was a business I had registered with the state of Virginia, which was not an LLC, just a business I registered with the state. It cost me like $120 for the year or something to register with the state. And I had a website and things like that. But I was doing business, I myself, my person, was doing business as this registered business, but I was not an LLC. So you can register your business without being an LLC. And we're going to get into that in a minute. But then we became an LLC because I was starting to take my own clients, a little bit more risk in my business, a lot more income. So I needed to have some personal protection for our personal assets. And so we established our LLC. Another reason you might want to start your LLC from the beginning outside of protection of your personal assets is if you have a multi-member LLC. So this is basically like you and another person have ownership within the company. It could be you and your partner, your spouse. It could be you and a friend. It could be you and just a general business partner. It really depends. But it is recommended if you have more than one person in your business, you set up an LLC so you have personal protection from your own personal assets. So let's say one person has 51% stakehold in the company, another has 49%. The person who has 51% stakehold in the company, if you are not an LLC, has more risk to be for their personal assets to be rescinded than the person who has 49% stake in the company. So when you have this LLC established, it's only the business assets that are going to be rescinded if something were to happen. And the tax forms that you file as a self-proprietary and an LLC are the same. So you will file what's called a 1040. This is basically your self-employment tax. So this is saying that you made income from a place that is not through another company. You are not an employee of another company. When you are an employee of another company, you will get a W-2. And in that W-2, you establish how much money you want to be taken out for taxes every month, every time you get paid. The way that works when you're an employee is that you will be paying a portion of Social Security, Medicare, things like that, your state income taxes. And then the business in which you were employed by pays a portion of that. They pay into your Social Security, they pay into your Medicare. That is part of your benefit of being an employee with that company. When you are self-employed, LLC, or self-proprietor, you are paying your own self-employment tax. So this 1040 is your self-employment tax. This is what you are filling out so that you can say, I made this much money this year, and then they will tax you based on how much money you made. It's around 20% is what people, accountants will tell you to set aside for your taxes. Now, when you file your taxes as self-proprietary or LLC, you are generally required as a self-employed person to file quarterly. This basically means every calendar quarter, the IRS will say you need to pay us a certain amount of money based on what you think you will be making for the year. That can feel really confusing, especially if you're a brand new business, because you're like, I have no idea how much money I'm going to make. And even in the first couple of years, it can feel really confusing because you don't really know where your business is going to go. You may not have established a track record of what your taxes will look like. The first year, generally, especially self-proprietary, the IRS doesn't really think much about you filing quarterly taxes. When you establish an LLC, they will be looking for that. They will be looking for your quarterly taxes. And generally, you will look at the year previous to see what your quarterly taxes should be. But that's not always, obviously that's not the case. I have this budget form that I'm going to share with you. It is not mine. It is from a friend of mine who is also a client, or was a client of mine. Before we finished her work, we redid her website. Her name is Atia Ingram. She owns Ingram Financial Management. She has a self-proprietor, single member LLC budget tracker. And at the bottom, you can put in all of your income, your expenses, everything in there. And at the bottom, it will tell you what your suggested month or quarterly taxes should be. And so this really gives you an idea of what you should be paying or could be paying. At the end of the year, when you file your end of year taxes, just like your personal income taxes, the IRS will tell you, you've paid too much, here's a refund, you've paid too little, this is what you owe. Very rarely do they Goldilocks you and say you paid just right, but so you will then go, you'll fill out these forms and you'll send those into the IRS quarterly. And again, contact a tax professional about how you should be doing either your first, second, third year of quarterly taxes, what that looks like, what the dates are, how to pay those. You will pay federal and state generally. Again, kind of depends on the state. So you really need to consult with a tax professional within your state to figure out exactly what you should be doing to make sure you're staying under legal standards. Okay, so let's talk about registering your business. So now we know self-proprietary, LLC. Cool. I know what those two different things are, but how do I register a business? And how do I establish an LLC? So registering your business is not always the same as establishing your LLC. If you are a self-proprietor, like I mentioned before, you can register a business in your state without having an LLC. You can still say you own this business, you are doing business as XYZ. You pay a certain amount to your state, depends on the state of how much that is. Depends on how often you pay. Everything is different. The process is different. Who you go through is different for every single state. So you can register your business within a state without having an LLC. When you establish your LLC, sometimes that will register you in the state for your business, but sometimes it won't. So it again depends on the state. You may have to go through a whole different process to register your business in the state versus establishing the LLC. Primarily because your LLC can actually be established in a state in which you don't reside. And there are reasons for that. There are tax benefits in different states to have your business, have your LLC established in specific states, but then
have your business actually being performed in another state. And again, lots of complications around this. So definitely consult a tax professional because every state's a little bit different. But you will see, if you look at some of the biggest businesses out there, Target, Amazon, Tesla, all of these big companies actually have their headquarters in one place. For example, Amazon's headquarters were in Seattle. I think they may have just moved, but their business was established in Delaware. I think they may have moved it to Texas now, but that is because Delaware, Texas, and Wyoming are some of the best states for businesses to establish their LLCs, because as they grow, not necessarily as a regular LLC, but when you start to look into incorporating your business, they have certain tax benefits within those states. So you definitely need to look into, where do you want to establish your business? Are you looking to grow to a certain point where you might need to incorporate your business? And if so, where should you establish your LLC? And then registering your business within the state you are doing business in can also vary. So if you are a virtual business or just doing business in one state, you may have your business, your LLC established in, let's say, Wyoming, but you live and perform your work, or your business is running out of the state of Florida. You may have to register your business with the state of Florida, and then you may have to register it as a foreign entity. It just kind of depends. It is all sorts of complications. And then if you have businesses in multiple states, you typically will register your business with the state you have your LLC in, and then you will be a foreign entity in the state in which you are performing that business. And there's also state nexus laws where you may have your business in one state, but you are sending products, like Amazon does, sending products to people in all different states. You have to pay state nexus taxes if you sell a certain amount or have a certain number of transactions within that state. So again, consult a tax professional, because it is uber complicated and there are so many facets to it that can just be like completely mind-blowing. But in terms of our small business dreamers out there who are just like, I just want to get started in my very first business, I don't know what to do, I will list out the steps for you at the end of this episode. But so far, we've talked about getting your EIN or your TIN. If you are self-proprietor, you can register for an EIN. If you decide to establish an LLC, you will establish your LLC that will give you your TIN. And then you'll decide which state you are establishing your LLC in, and you will register your business within that state. And then you may need to register your business in which the state you are physically located in, if you are doing business in a different physical location than where that business is established. If you are a completely virtual business, you may not need to register your business in another state, because you are just working remotely from where your LLC is established. So it just kind of, again, depends. Okay, so now we have talked about registering your business, EIN, we've talked about self-proprietary, we've talked about LLC, how you are going to tax that. The next biggest question typically that we get is, how do I know if I need to establish an S-Corp or incorporate my business? Incorporating your business, there are two main different types. There's an S-Corp and there's a C-Corp. And so deciding if you need to incorporate your business really is based on the tax benefits. Generally, when somebody hits a certain income threshold, meaning their business has generated a certain amount of revenue, and from that revenue, they have a net income, meaning after expenses and after all these things, have hit a certain threshold, it is more beneficial tax-wise for you to incorporate your business than it is to stay as a single member, multi-member LLC, or a self-proprietary. This is because when you incorporate, it gives you an opportunity to establish whoever's in your business, whoever is part of your business, as W-2 employees. It complicates your taxes extremely, because you are not only doing your business taxes or your personal income taxes from distributions. If you are an S-Corp, a C-Corp is quite different, and I'm not really going to get into it because that's a lot more complicated. But when we're talking, S-Corp is usually the first step. When we're talking about an S-Corp, it is a lot more complicated, because you have W-2s that you are paying, and you are calculating the taxes that are being taken out for W-2s, but then you also have your distributions, which are go under your personal income tax for anybody who is a member of your company. So basically how this works as an S-Corp, and this is a tax designation. You are still an LLC, but you are being taxed as an S-Corp. What this basically allows you to do is to take your members, whoever you decide, is going to be a W-2, and you are paying them a reasonable salary for what they are doing in their business. That doesn't mean you have a W-2, a person, and they're the CEO and you're paying them $200 a month. Like, that's not a reasonable salary, right? So you have to look what might be a reasonable salary for the person who is being held in that position. And you pay them a salary every month like you normally would for a regular W-2 employee. And then your business is also paying into that employee's Social Security and Medicare and all the other taxes that are required by the federal or state for that W-2. So that is being expensed from the business as part of the taxes you are paying into that employee's W-2. And then your employee will be taxed on their salary for those same sort of things based on the amount that they're, what's it called? Why can I not remember the term? The amount that they designate to say that how much they want to be taken out. If they want extra, when you fill out your W-2, I haven't filled one out in so long. When you fill it out, you say, how much extra you want to be taken out. So if they say 0, it's just the regular standard tax deduction. If they want more taken out, that's what will be taken out. Anyways, that is their own personal, income that goes with their personal income taxes when they file their personal income taxes. As an S-Corp, the way it works is that any additional revenue in the business is given as what's called distributions to their members. This could be just you. This could be you and a business partner. This could be you and investors. It really just depends on what you have established as your members. And then those distributions are part of your personal income tax. You have certain forms that you fill out. K1, I think it's a schedule K1, something like that. Like you have an 1120 and then you have a K1. I think those are the two forms you fill out as an S-Corp. And you will basically say, these are the distributions that we've paid, that these people have been given. And then they will take that and they'll say, I've been given these distributions in addition to my personal income, whether they have a regular salary job or whatever they're doing in it to make their own income. So, then that's part of the personal taxes. The reason why this is a benefit for you as a business is that, one, you are able to expense some of the taxes that you have as your S-Corp that you're paying to your W-2, and the person you're paying a W-2 to isn't paying self-employment taxes anymore. So that self-employment tax rate is much higher, 20-something%, versus paying into your own taxes. Paying as a W-2, getting that removed is a lot lower. And so it can really be beneficial when you've hit a certain income threshold to, take that extra work to do an S-Corp versus just a single member, multi-member LLC and just doing your regular 1040 form for the self-proprietary or an LLC. So the benefit really is that you were just taxed at a lower rate as a W-2 than you are taxed on as a self-proprietor or as a single member, multi-member LLC. The reason people don't do this from the beginning is because it doesn't make sense tax-wise. There's no real tax advantage when you're not making a certain income threshold for your business. So I realize this is a lot of information and can feel really, really complicated in terms of starting your own business, and it really can feel exhausting. And it can feel like it's a lot of information and it can feel really overwhelming. Of course, if you have any questions, I always say, send me an email. It's in my show notes how you can get in touch with me, or send me a DM on Instagram. I will try to answer you as best I can or direct you to a tax professional. I can say to you that this is something that stalled me for a long time in making me feel like I was a real business. For a while, when I was self-proprietary, I really saw it as a side gig and like a side hustle. And I really do hate that term as an entrepreneur. Like I don't like when people say they have a side gig or a side hustle, but the IRS actually does call it side hustles or I think it's side gig is what the IRS has an actual qualification for that in some of their tax forms. It's side gig or something like that. But I understand it not being a full-time job, full-time business, full-time, you're doing some things on the side, to generate some income. Maybe it's not a full-time business to you yet, or maybe not established as a business yet. But then thinking about how I wanted this business to grow, it did stall me. It did make me feel like, oh, do I want to get any bigger? Do I want more work? Because this is going to be a lot more work. Not so much for me. My husband's my CFO. So it's going to be a lot more work for him to do our taxes, to keep all of this in line, to make sure we're paying scheduled quarterly taxes. Now, as an S-Corp, like, it's so much additional work. Is it beneficial for me to grow the business in this way? And it was complicated. It was scary, especially registering my business for the first time when we were back in Virginia. Do I register a business? How do I do this? What do I pay for? Do I pay for this every year? What happens when we move? Because we're a military family. So do I need to dissolve my business in Virginia, establish a foreign entity in a new state? How does this work? What am I supposed to be doing? It is really confusing and can feel really scary and overwhelming. There are a ton of different online resources out there that can help explain this to you in the best layman terms possible. I did this podcast episode because I know I personally was really confused about this from the beginning. And I feel like sometimes just having somebody, a normal person, explain it to you with no alternative agenda of like trying to get you to sign up for anything. And two, just not using some of the legal terms and just using some personal experience to say, okay, this is what we did and what we experienced in setting up our businesses can really be helpful to those who are just getting started. So, of course, if you guys have questions, please reach out. I will try to answer them the best I can. We'd originally planned for my husband to be on this podcast episode as well, but work is just too crazy for him right now. And I really wanted to get this out during tax season. And as we still have some of our small business dreamers kind of in that first stages of starting their business with the new year, I really wanted to kind of get this out there. So we may dive into a future episode later about, doing an S-Corp and what that looks like, which is what we are now, and kind of our journey from self-proprietor to LLC to S-Corp, what that looked like for us and things like that. So we may have a future episode on that that'll dive in a little bit more, but hopefully this gives you an overhead look, umbrella view of what it is to be an established business and whether you're self-proprietary or an LLC. And I can 100% tell you, even though this may be minimal for you or you're just getting started, this is your business. This is your baby. This can grow to where you want it to be. There are people and resources out there that can help you. And I hope that something like the scariness of the taxes and the business formations don't stop you from chasing your dreams. Again, thank you so much for joining us today. I hope you got some good information and it wasn't even more confusing to you. And I hope you join us for our next episode. And I will chat with you soon. Again, my name is Lauren Lomsdale. This is the Build Your Own Business podcast with the Startup Collective. We are here to help you start, grow, and scale your very own business. Have a good one.
Thank you so much for joining us today. I hope we gave you some valuable insight into building and growing your own business. Head over to the Startup Collective to learn more about building your business from the ground up. We teach you how to get started in your business to include designing a high converting website, creating your email marketing, growing your audience and customer base through social media and digital marketing, and even business photography and more. If you're in the scaling phase of your business, join our Grow Your Own Business group coaching. We will give you weekly tasks and accountability in growing your business the right way, and we actually show you how to do it. Visit us at thestartupcollective.co today and follow us on Instagram at The Startup Collective. Dream, start, build, and grow. See you next time.